Yes, very good afternoon. Right, so we are studying CARO 2016, that is the Company's Auditor's Report Order 2016, in which first very important we studied the applicability of CARO. And then after that we studied the 16 clauses of reporting under CARO. And what did we say? Fill in the columns regarding the date of arrival and date of departure for an evening flight for MNR and PNR. Right? F was for fixed assets, then I for inventories, L for loans to section 189 parties, next L for LIGS, loans, investments, guarantees, securities, are they in compliance with the provisions of section 185 and 186? So you need to say that investment is not more than 2 layers of investment company. The rate of interest is not lower than the government prescribed rate. Then where it has exceeded the limit, a special resolution has been passed in the general meeting. Then you need to check the MBP1 and the MBP2 forms. You need to check the statutory registers, section 189. That is written representations from the management. Yes, minutes of the meeting. Right. Then after that, deposits from public. If the company has accepted deposits from the public, then one, whether it has complied with the provisions of the section 73 to section 76 of the Companies Act 2013, any rules framed there under, and any RBI directives issued in this regard. If not complied, that means there is a contravention. So one, you need to state the nature of the contravention and any order passed by NCLT, CLB, RBI, court, tribunal, at least whether that order has been complied with or not. Then C was for cost records. If maintenance of cost records have been prescribed by the central government under section 148 subsection 1, whether such cost records have been made and maintained. So are you going to do a detailed examination of the cost records? No, just a general review of the cost records, prima facie, whether the cost records have been made and maintained. Then this clause 7 is a very important one. Statutory dues divided under 2. Undisputed and disputed. Undisputed, the list is inclusive. Disputed, the list is exhaustive. For undisputed, 2 reportings. One, the regularity of payment, and second, those undisputed statutory dues which are outstanding as on the date of balance sheet for a period of more than 6 months from the date they became payable. Yani ke all outstanding on or before 30th of September of that financial year. Right? And then for disputed statutory dues, the amount involved and the forum where the dispute is pending. And a mere representation to the department does not constitute a dispute. Then, and then we said lump sum payment, that will be considered as regularity in payment. Right. Then after that, the repayment of dues. Right, whether the company has defaulted in the repayment of dues to banks, financial institutions, government, and debenture holders. If yes, the period and amount of default is to be reported, and in case of defaults to banks, financial institutions, and government, lender-wise details are to be provided. Right? Then E, end use of monies raised. What does it say? Where any monies have been raised by initial public offer or further public offer, including debt instruments or any term loans, whether these have been applied for the purpose for which they have been raised. If not, the details along with the delays and the defaults and the subsequent rectification, if any. Right? So you need to check the proposed use and you need to check the actual use. And a proposed use from the offer document, the prospectus, the loan agreement, and the actual use from the financial statements, the books of account. Then F was for fraud. Any fraud on the company or any fraud by the company, by its officers or employees, noticed or reported during the year. If yes, the nature and amount involved is to be indicated. So immaterial frauds not reported, external frauds not reported, suspected frauds not reported under CARO 2016. Then what did we say? Make inquiries of the management and the inquiries of the employee. Examine the minutes of the meeting, examine the internal auditor's report, and you can also take the written representations from the management. right? And also a reference to 143.12, duty to report the fraud to CG, and SA 240, which is the standard on auditing in relation to fraud. Then this M is a very important one, managerial remuneration. Whether managerial remuneration has been paid or provided for in accordance with the requisite approvals mandated by section 197 of the Companies Act 2013, read with schedule 5. Right? And if not, then the amount involved and also the steps taken for securing refund of the same. Right? So what are the points we studied for managerial remuneration? One, you need to check 11% of net profits. Then after that, not applicable to a private company. Then managerial remuneration does not include sitting fees and any fees paid for services of a professional nature. Then if you want to double the remuneration, then in that case it says special remuneration, then you need to pass a special resolution. And if you want to pay excess, then central government approval required for the same. Then after that, Nidhi company. Right? Nidhi company, what did we say? 1 and 2. 1, net owned funds to deposit liability in the ratio of 1:20 to meet out the liability. And at least 10% unencumbered term deposits to meet out the liability. So one, we saw what is included in net owned funds. Equity, share capital and the free reserves minus the accumulated losses and the intangible assets. Preference share capital not included in the net owned funds. And then after that, in the the deposit liability, it says the recurring deposit, the fixed deposit, the savings deposit, all this will be included in the deposit liability. Then you need to obtain the computation from the management, and also you need to check 10% in the unencumbered term deposits. Right, that was regarding the Nidhi company. This was the question which was also asked in your November 16 exams, and a Nidhi company. Right. Then after that we saw clause 13, which is regarding the related parties. Regarding the related parties, there are 2 points. One, the transactions, and second, the disclosures. One, whether all the transactions with the related parties are in compliance with section 177 and 188 of the Companies Act 2013. And the details of the transactions with the related parties have been disclosed in accordance with the applicable accounting standard. So what is the applicable accounting standard over here? AS 18. Right? And then I told you all the audit procedures which we talked of for SA 550, which is on related parties. Same auditor chashma you can write down over here also. And now we said, now obtain the list of related parties, written representation from the management, arm's length transaction, then are they in the ordinary course of business or are they outside the normal course of business? Right, then the completeness of the information provided by the management, management's procedure to identify related parties. Right, so all the audit procedures of SA 550, you can write down for the clause 13. So now for related parties, we have 3 references. One, AS 18, second, SA 550, and third, clause 13 of CARO 2016. Then after that, we saw preferential allotment. And where any preferential allotment or private placement of shares or fully or partly convertible debentures have been made during the year. One, whether it is in compliance with section 42 of the Companies Act 2013. And second, whether it has been used for the purpose for which it has been raised, if not, again the details. Right, so that was preferential allotment, and very important point over there was the private placement offer letter. Do you remember that? The private placement offer letter, and then again we said over there proposed use and the actual use. Proposed use you will get it from the private placement offer letter, and the actual use you will get it from the books of account. Right, so we are now left with just 2 clauses in the CARO. One is regarding the non-cash transactions, and the last one is regarding the registration with RBI. Right, so non-cash transactions, whether the company has entered into any non-cash transactions with the directors, whether they are in compliance with section 192 of the Companies Act 2013. Yes, non-cash transactions with the directors, what does it say? Whether they are in compliance with section 192 of the Companies Act 2013. Right, non-cash transactions with the directors. Can you give me an example of a non-cash transaction with the director? Perquisites given, like, instead of giving them salary, okay, you've given them one Mercedes or Jaguar. You understand? Of the company, the company's assets you have given them. So that is what a non-cash transaction with the director. Yani ki instead of giving them salary, instead of crediting that much of money into their bank account, you've purchased a car for them and you've given the car to them. So very important, obviously, just if I take the example of the car, then very important for the auditor is also to check the value at which the asset has been transferred. And okay, whether the valuation of the asset has been done by a registered valuer. So say as the company gives the director some goods on credit basis during the current year and the settlement was done in the next year, will that be considered as a non-cash transaction? No, that will not be considered as a non-cash transaction, okay, due of 1 year if it is collected in the next year. Shares allotted at a less consideration, will that be considered as shares non-cash transaction? No. Again, it is at a lower price and it's at a discounted price type, sweat equity shares. So again, that will not be considered as a non-cash transaction. So what does it say? Whether the company has entered into any non-cash transactions. Again, this one is an R raised to 10. My focus is on 11. What is 11? Managerial remuneration. What is 13? RPT, related party transactions. Then this 15, non-cash transactions with the directors or the persons connected with him, whether the provisions of section 192 of the Companies Act have been complied with. So now Caro is so straightforwardly telling you to check compliance with the provisions of Companies Act. Like clause 4 directly telling you to check compliance with 185, 186. You understand, the clause 14 is telling you to check compliance with section 42. You understand, clause 11 is telling you to check compliance with section 197 read with schedule 5. Right, so the starting point of the auditor's procedures would be obtaining a management representation. So again, the written representation. So again, now from the auditor's viewpoint, no, written representation. Then what does it say? You need to do a scrutiny of all the varieties of registers which are maintained by the company. It says the register of loans, guarantees, securities and acquisitions made by the company, register of contracts with the related party, yani ki the 189 register, fixed assets register, then the minutes book of the general meeting and the meetings of directors, report on the AGM, which could provide evidence to the auditor as to the existence of any non-cash transactions. Right, so what does it say? The details of the non-cash transaction. So one, the management representation, then the various registers and the minutes of the meeting. Then the reference may be also made to the disclosures in the cash flow statement for the non-cash transactions. And what are these? These are examples where it says will not be considered as a non-cash transaction. What are these three examples? See what I have highlighted over there. Will not be considered as a non-cash transaction. What does it say? Acquisition of fixed asset occurs in 1 year and the adjustment is done in the next year. I told you, no, acquisition in 1 year, adjustment done into next year is not a non-cash transaction. Mergers under code schemes, amalgamation, purchase consideration, asset liability transfer, not a non-cash transaction. Settlement of a genuine debt by issuing equity shares is also considered to be an allotment of shares against cash consideration. So again, that will not be considered as a non-cash transaction. So what does it say? Acquisition of fixed asset, mergers under code schemes and genuine debt by issuing equity shares, all these three are not non-cash transactions. Then what is required for a non-cash transaction? Prior approval for such an arrangement by a resolution in the general meeting. And also what does it say? If the concerned director of the or connected person is the director of the company's holding company, then also the approval is required by a resolution at the general meeting of the holding company also. So what is required for a non-cash transaction is general meeting resolution. And if it's in the holding company, then even holding meeting ka general meeting resolution required. Very important, the notice for approval of the resolution should contain the details of the arrangement along with the value of assets involved duly calculated by the registered valuer. So what is very important over here? Okay, I told you the car is being transferred. So the price at which the car is being given, the valuation of the asset done by a registered valuer is very important. Remember clause 10.1.1 in ethics. I know what were the three exceptions to 10.1.1? Do you remember the three exceptions to 10.1.1 in ethics? What are the three exceptions to 10(1)(1)? What are the three exceptions to clause 10 part 1 first schedule to the Chartered Accountants Act? Yes, you will tell me. Yes, wonderful. Right, what is clause 10? It is regarding percentage contingent basis. And what are the three exceptions to 10(1)(1)? Receiver, liquidator, auditor of a cooperative society, and third one, valuer for direct taxes and duties. So just that valuer is over there also, no? So here also it says the property being valued by a registered valuer. Right, so one, what does it say? General meeting resolution. Second, in the notice of the approval for the resolution, again the details of the value of the asset. And should check compliance and verify the notice of the general meeting that includes the particulars of the arrangement along with the value of the assets involving such arrangements, and it has to be calculated by the registered valuer. Right, so what is clause, yes, what is clause 15? Non-cash transactions, right? What is clause 15? It is regarding the non-cash transactions entered into with the directors and the concerned persons, whether it is in compliance with section 192 of the Companies Act 2013. As an auditor, what are the audit procedures you are going to do? Written representations from the management, whether any non-cash transactions have been entered into. Then after that, what does it say? You need to verify the register of fixed assets, the register of loans, investments, the section 189 register, and a register of loans, guarantees provided during the year, the 189 register, the fixed assets register. Then you also need to go through the minutes of the meetings. Minutes of the meetings of the shareholders, that is the general meeting minutes, and also the directors meeting minutes, right? Director meeting minutes. Then in addition to that, what does it say? Resolution, general meeting resolution you need to check. You also need to check the notice being sent for the same, the notice of the resolution being sent. And very important, the value of the assets has been determined, है ना? The valuation of the asset has been done by a registered valuer. And the value of the asset has been determined by a registered valuer. Right, so these are the points. And then you can also write what is not included in non-cash transaction. Which are the transactions which are not covered. So like we said, settlement of a genuine debt, or mergers, or transfer of an asset. Right, this it says will not be considered as a non-cash transactions. So again, first you need to understand what is the reporting and then what are the audit procedures. Yes, what is the reporting and then what are the audit procedures. So that is clause 15, which is regarding the non-cash transactions. And the last clause 16, which is regarding the registration with RBI. What does it say? Whether a company which requires registration under section 45IA of the RBI Act, a company which requires registration under section 45IA of the RBI Act, whether such certificate of registration has been obtained. Whether the certificate of registration has been obtained. Yes, what does it say? Where a company is required to be registered under section 45IA of the RBI Act. If so, whether the registration has been obtained. Right, so we discussed today before, no, is CARO applicable to non-banking financial companies? Yes. We said no, banking company not applicable, but non-banking financial company applicable. So first you need to check whether this company is the company that requires registration under section 45IA. Yes, and when would be a company which will require registration under section 45IA? It is if providing those non-banking financial services. Like, giving of loans, accepting of deposits, Nidhi company and all those. Equipment leasing finance company, hire purchase finance company. Do you know these companies? है ना, leasing company list, equipment leasing finance, Shriram Finance, Muthoot Finance. These are what? Non-banking financial companies. So first you need to check whether the activities of the company are such which require registration under section 45IA. And once the activities are such, then whether they fulfill the conditions and whether they've obtained the certificate. Right. So examine the transactions of the company in relation to the activities covered by the RBI Act and the directions related to NBFC. So one, does it fit into the category of NBFC? Then only it will require a registration. No. Then it says examine the company's financial assets constitute more than 50% of its total assets, and income from financial assets constitutes more than 50% of the gross income. So that's another condition. Then whether the company has net owned funds as required for the registration as NBFC. Then whether the company has obtained the registration as an NBFC, and if not, the reasons to be documented. And again, it should be incorporated, okay, whether it has obtained a certificate of registration or whether not. So one, what did I say? You need to examine the activities. Second, you need to check are they fulfilling the conditions. And third, you need to check whether they've got the certificate. What are the activities? I told you, loan company, equipment leasing finance, hire purchase, falling within the definitions criteria given by RBI. Then what is the condition? At least 50% of their total assets should be financial asset. At least 50% of their gross income should be from the financial assets. 50% of their income. Then after that, the net owned funds as required, and then the certificate of registration has been obtained. This point I'll also come, COR, certificate of registration, when I go to the chapter of NBFCs, audit of non-banking financial companies. So did you understand what are the 3 points? Again, this is an important one, registration with RBI, new entry. Right, what are the points over there? First one, the activity is being carried out. Second one, the conditions. And third one, the certificate. Understood? Right? So again, this is R raised to 10. And what are the points I'm going to write? One, examine the activities. Second, you need to check for the conditions. And third, you need to check whether they have obtained a certificate of registration. What are the conditions? At least 50% of their assets should be financial assets, right? And at least 50% of their income from gross income should be from income from financial assets. Income from the financial assets. And they should also comply with the requirement of the net owned funds as prescribed. Net owned funds as would be prescribed. And the last one, whether they have obtained a certificate of registration, and if not, again the reasons to be documented. Right, so that is clause 16, which is regarding the registration with RBI. Right, clause 16, which is regarding the registration with RBI. Yes, registration with RBI. So what are the auditor chashma points over here? Examine the activities being carried out, then the conditions being fulfilled, and then whether they've obtained a certificate of registration. Yes, what are the conditions? 50% and net owned funds criteria, right? And then the certificate of registration. Yes, is that okay? Yes. Financial asset means it says like, you have got those construction vehicles, you understand, which they give it on lease. So that's what you give it on lease or which you give it on hire purchase. That would be an example of a financial asset from which you earn some lease rentals, from which you get lease income. So that would be an example. Say you take a deposit. So that would be an example of a financial matter. Okay. Right. So see, if I purchase a plant and machinery and I'm going to use it for production, then that is not a financial asset. But if I have purchased a machinery to give it on lease, then that's a financial asset. Then that becomes a liability, no, for the entity. So main example could be taken of these equipments or plant and machinery, which are given on lease, mainly the construction vehicles. You see, all the construction companies, all the assets, those big cranes and bulldozers and cement mixers, all of those they have taken on rental. So there are companies who have booking for such leasing, companies who have their assets booked up to say 2024 or 2025 also. 2 years the particular machinery, the vehicle is going to be here, then next 2 years on another site. Okay. Right, so that completes CARO 2016. Yes, special importance right now. It is in the limelight. है ना, CARO 2016, and mainly the new clauses which have come. I've told you so many times: managerial remuneration, LIGS, managerial remuneration, related party transaction, registration with RBI, non-cash transactions. Okay, right. So once again, tell me the applicability of CARO. Yes, that it shall apply to every company, including a foreign company, except a private limited company, not being a subsidiary or a holding of a public company, having paid up share capital and reserves and surplus not exceeding 1 crore as at the balance sheet date, and total borrowings not exceeding 1 crore from banks and financial institutions at any point of time during the financial year, and total revenue as disclosed in Schedule 3, including revenue from discontinuing operations, is not exceeding 10 crore during the financial year. Then one person company, small company, Section 8 company, insurance company and the banking company. And then what are the 16 clauses of CARO? Fixed assets, inventories, loans to 189 parties, loans, investments, guarantees, securities, deposits from public, cost records, statutory dues, repayment of dues, end use of monies raised, fraud, managerial remuneration, Nidhi company, related party transactions, preferential allotment, non-cash transactions, and registration with RBI. Right, so those are the 16 clauses, right? So that completes chapter 3. Right, so we did a huge chapter on standards where we did 46 standards. Then after that, the 34 clauses of ethics. Then after that, the 16 clauses of CARO 2016. And now we come to the chapter number 4, which is regarding the company accounts and audit. So here we are going to discuss a few sections of the Companies Act 2013 in relation to accounts and audit. So actually this chapter is 100% overlapping with your CA final law. And 100%, you do entire of all this, in the law class also. But still, as there are a few sections related to accounts and audit, few of them I'm going to take it in detail, others I will just make a passing reference. You understand, right? So with that, yes, can you tell me a few sections of the Companies Act which I'm going to discuss right now? One, the entire set from 123 to 127 is regarding declaration and payment of dividend. 127, Investor Education and Protection Fund. Then 128 is regarding books of account. 129, financial statements. 134, director's report, yes, board's report. 135, CSR, corporate social responsibility. 138, internal audit, very good. 139, appointment of the company auditor. 140, removal of the company auditor. 141, qualifications and disqualifications of the company auditor. 142, auditor's remuneration, casual vacancy, everything 139. Okay, 143, powers and duties of the company auditor. 144, auditor not to render certain services. 145, auditor to sign audit report. I told you, clause 12 part 1 first schedule. You remember signing with that section 145, auditor to sign the audit report. 146, auditor to receive notice and attend general meeting. 147, punishment for contravention for not complying with all these sections. And 148, cost audit. So these are minimum number of sections which you compulsorily need to know for audit. Minimum. Do you need to remember the section numbers? 100% yes. You understand? As per the relevant provisions of the Companies Act is not accepted. And this much so you can learn here. You understand? No, right? I don't know. Those of you who've been from the Maharashtra State Board, SSC exams. Okay, you had those Navneet ka guide and Chetna ka self-study, you remember? Such big answers over there. At least I remember, learning such big, those science and science 1 and maths and the science mainly, geometry so difficult. But these science answers and history, geography answers used to be so big. Uske aage ye 2-4 section number kya hai? You understand, no? Remembering a few section numbers here and there is not actually a big deal for you. Okay, don't underestimate your potential. Okay, I can't remember. You can certainly remember. Right, so the first section which I'm going to start discussing with you is section 141, which is regarding the qualifications and disqualifications of the company auditor. And before I discuss that, I would just like you to show you the rainfall which came in November 16 exams from these company audit chapter. You understand, the rainfall, matlab heavy rainfall from what do you say? This chapter of company audit in the November 16 exam. So this is RTP, okay. Right, so this question number 9, we are going to see, but just to show you, and a 4-mark question. And see, my target is always on the RTP question, no? You understand, no? This was there in RTP November 15 with number, with word. SE shifted into the November 16 paper. The moment I saw the question paper and I saw adroit, I said, ye aa gaya adroit. Because that was there in the November 15 RTP now. So I was taking it in the class. So the moment I saw the word adroit, I said, okay, that RTP question has come over here. Okay, so that's one November 16, yes, 4 marks. Keep a track. 4 marks. Then this is RTP. Then this. Question number 12. What are the relevant sections of the Companies Act and steps involved in the audit of government companies? So that's more 4 marks. So that's 8 marks. Okay, then next one is this duty to report fraud to CG. And duty to report the fraud to CG, 143.12. So more 4 marks, so 12 marks, na? You understand? Okay, then this is RTP. Then, while adopting the accounts, interim dividend, so that's again 123 to 127. So that's another 4 marks, so that's 16 marks. I told you it was rainfall. In number 16 paper. You understand? Okay. Right. So that's it. Okay. But then 16 marks asked, in number 16. And on an average, 6 to 8 marks were asked in every exams. Like May 16 paper also, if you see, around 2 questions are there. On an average, 2 questions. But this attempt, though, I don't know. They asked 4 questions from company audit itself. Okay. Right, so with that, I come to section 141, which is regarding the qualifications and disqualifications of the company auditor. Right, how many of you have done this part in your law or finished with law? Okay, so that means my job is easy. You're going to believe whatever I'm going to say. You're not going to cross-question me. Okay, right. So section 141. Subsection 1 and 2 is regarding the qualifications. What does section 141 subsection 1 say? A chartered accountant. Obviously holding a certificate of practice from the Institute of Chartered Accountants of India. And a firm can also be appointed in the firm name where majority of the partners in the firm are chartered accountants. So what does 141 subsection 1 say? CA or a firm. Yes, where majority of the partners of the firm are chartered accountants. And then what does subsection 2 say? A firm includes an LLP, but only those partners of the LLP who are chartered accountants. So in total now in the qualifications we have 3. Individual, firm and LLP. LLP new entry, no? Yes, earlier it was only individual and firm. So now subsection 1 says individual and firm, and subsection 2 says firm includes an LLP. And obviously only those partners who are who are chartered accountants. Only those members of the LLP who are chartered accountants. But more important for us than the qualifications are the disqualifications which are given under 141 subsection 3. No writing with me, you will mess up, you better copy it later on. Right, so 141 subsection 3, there are 9 disqualifications for the company auditor. No question to be asked in between, let me complete the entire 9 disqualifications first. Right, 141 subsection 3 clause A. What does it say? The first disqualification, who cannot be appointed as an auditor of a company, a body corporate other than LLP. Why other than LLP? Because LLP has been shifted into the qualifications, right? So they say limited liability we don't want, for the auditor. So that is why company form of organization cannot do the audit. Second one, it says an officer or employee of the company. Right, so if I'm an officer employee of Geo Limited, can I do the audit of Geo Limited? No, I cannot do the audit. But if I'm an officer employee of the subsidiary of Geo Limited or of the holding of Geo Limited, can I do the audit of Geo Limited? It says very clear, Nina, officer or employee of the company. So if I'm an employee of the holding of Geo, can I do the audit of Geo? Yes, as per the disqualifications, yes. But I taught you in ethics, public conscience is expected to be ahead of law. And the requirement of independence should be, interpreted much more strictly. The auditor should not place himself in a position which will compromise or jeopardize his independence. And jeopardize or harm his independence. So though Companies Act has not disqualified, but still we, as per our public conscience, we are not going to accept the position as an auditor where we are an officer or employee of the holding or subsidiary also. But Companies Act disqualification, what does it say? Officer, employee of the company. And it says the officer includes director, shadow director. Yes, shadow director. Right? And then it also includes the manager and the key managerial personnel of the company. Yes, you know shadow director? Yes, shadow director. Manmohan Singh. Accustomed to act in accordance with the directions and instructions of other. You understand? Shadow director. For name's sake, you are the director of the company, but everything what I tell you, you do it, those actions are taken in the company. So it says director also and shadow director also. Now here only the shadow director who is a person, but if you see the main distinction between a director and a shadow director, a director has to be an individual, but a shadow director could also be a company. It could also be a company, it could also be a firm, it could also be an LLP. So that is what you'll have to check through the board meetings, and whatever influence in the decision making and so. So it says director, shadow director, manager, key managerial personnel of the company. The term officer employee includes. So directly, if I am an officer employee of Geo, can I do the audit of Geo? No. So what I do, I tell my partner, my employee, the officer's partner or the officer's employee to do the audit of Geo. Clause C says even that rasta is band. What does it say? A person who is a partner or who is an employee of an officer or employee of the company. Now what are the 4 points they've given over there? See, they are so interesting, people. Partner of an officer of the company, partner of an employee of the company, employee of an officer of the company, employee of an employee of the company. Normal people can't understand. Others are chartered accountants. You understand? No. What does it say? Partner of an officer, partner of an employee, employee of an officer, employee of an employee of the company. You understand? So direct rasta ban and indirect rasta bhi ban. So I cannot do the audit, my partners, my employees, even they cannot do the audit of Geo Limited. Hai na? Right? Do you understand? See? Right. Then the more interesting one is the D one. What does it say? A person or his partner or his relative. Okay, PPR. What is PPR? Person, partner, relative. First let us meet the relative. Right, what does it say? Relative. Right, relative, it says one includes the members of the HUF if it's a Hindu undivided family. And other than that, if it's not an Hindu undivided family, then it says one relative includes spouse. right? So one, it says relative includes the spouse. Then after that it says parents, है ना, father, mother. Then siblings, यानी के brother, sister. And then it says children, यानी के son and daughter, right? Son and daughter. And then in addition to son and daughter, you have son's wife and you have the daughter's husband. Right. Yes, father includes stepfather. Mother includes stepmother. Brother includes stepbrother. Sister includes stepsister. Son includes stepson. But daughter does not include stepdaughter. And there is no question of son's wife and daughter's husband being step. So please don't apply your extra intelligence. Do you get that? Okay. Right. And this is so far. Now there is more confusion in your life. Right. Okay, I have incorporated this in the book, but I want to show you the original one. That is why I'm putting up the slide over here. Yes, what does it say? In section 141 of the Principal Act, matlab the main act, in subsection 3, in clause D, the following explanation shall be inserted. And now, for the purpose of this clause, the term relative, what am I reading? The Companies Amendment Bill 2016, which has been incorporated into your books. What does it say? The term relative means the spouse of a person and includes a parent, sibling or a child of such person or of the spouse. Matlab now even wife ka father, mother are to be considered. Even wife ka brother, sister are to be considered, and obviously children, common only, no. So children won't come, but you know extra, saas, sasur also and sala, sali. You understand? Even that it says will be included. And what does it say? Financially dependent on such person or who consults such person in taking decisions in relation to his investments. What they are going to do? They are going to make a case study in the exam. You know, say the spouse's, sister or somebody is taking consultancy from this person for his investment decisions or so, and that is why is that the disqualification attracted. So you have to write yes, as per the Companies Amendment Bill 2016. What does it say? These wordings are amazing, you know, and they have not substituted here, they have inserted. For clause I, what they have done, the following clause will be substituted. तो पहले वाला निकाल के उसके जगह ये लगेगा. But यहाँ पे substitute नहीं बोला ना, it says inserted, मतलब additional explanation. मतलब the original definition of relative remains, plus this is getting added over there. What does it say? It includes the spouse of a person, includes parent, sibling and the child. And I told you, parent, father, mother, sibling, brother, sister and child, that is son, daughter. And also it says are of the spouse. So also spouse, father, mother, brother, sister. And financially dependent on such person. So all father, mother, brother, sister, son, daughter not included. Only those who are financially dependent on such person or who consult such persons and make decisions relating to his investments. So now the term of definition of relative has been restricted. So your brother is invested, he is indebted to the company exceeding rupees 5 lakh, but he is not financially dependent on you or he does not consult you for decision making in relation to investments, then he will not be considered as disqualified. The auditor will not be considered as disqualified even though if the brother has shares, as long he is not financially dependent on you or he does not take consultancy from you in relation to investment decisions. Because you know, the moment when this clause had come, people had raised a lot of objections. Okay, how is this possible? If I want to do the audit of Infosys, my brother cannot hold the share of Infosys. Nowadays, so much of enmity between brothers. So first thing now brother will do, he'll buy the shares. The moment he comes to know, okay, if I buy the share, he cannot get the audit. The first thing he'll go in the morning, first the stock market opens, he'll buy the share. But what does it say? He is not financially dependent on you. He does not consult you. Then you purchase. Do whatever you want to do. Right? Do you understand? latest Companies Amendment Bill 2016. Okay. So I'll show you all the highlights which I've done. But this specifically I wanted to highlight it for you. You understand the definition of relative? Financially dependent on such person or so consult such persons. What does it say? In taking decisions in relation to its investments. It's there in your books also. So no need for you to worry. Ye dekho. Where have I put it? Ye first point only I've put it. Yes? Everyone? Okay? Okay, right. Then what does it say? PPR, person, partner, relative. A person shall not be eligible for appointment as an auditor if the person or his partner or his relative. Yes, what does it say? 141(3)(d)(1), 141(3)(d)(2) and 141(3)(d)(3). 141(3)(d)(1), 141(3)(d)(2 and 141(3)(d)(3). What does 141(3)(d)(1) say? Holds any security or interest. Holds any security or interest. However, relative. Yes, holds any security or interest. However, relative can hold security up to the face value of rupees 1 lakh. However, what does it say? Relative can hold security up to the face value of rupees 1 lakh. Second, what does it say? Has indebted. Yes, indebtedness. However, what does it say? All three, person, partner, relative, can be indebted up to rupees 5 lakh. And third one, guarantee, has given a guarantee. However, all three can give a guarantee, person, partner, relative, up to a face value of rupees 1 lakh. Okay, now please understand further. These limits, of security, interest, indebtedness and guarantee, what does it say? It applies to 5 companies, 141(3)(d). It applies to 5 companies. So if I want to do the audit of Jio Limited, one, I cannot hold the share of Jio Limited. Then second, the holding company of Jio Limited, the subsidiary company of Jio Limited, the associate company of Jio Limited, and any other subsidiary company of that holding company. I cannot hold the shares. I cannot be indebted. I cannot give a guarantee. Right? So 141(3)(d) is for 5 companies. Company, holding company, subsidiary company, associate company, and any other subsidiary company of that holding company. Yes, you cannot hold security or interest, you cannot be indebted, and you cannot give a guarantee. Okay. Now, so person, partner, relative, what does it talk of for 5 companies? Holds any security or interest, फिर आगे everywhere see they've used the name of those 5 companies. What does it say? Is indebted, is holding any security of interest in the company or its subsidiary or its holding or its associate or a subsidiary of such holding company. So I just showed you the 5 names. Okay. However, what is the exception? Okay, relative can hold securities up to the face value of rupees 1 lakh in the company. Right. So now, my father is holding 60,000 face value shares of Jio Limited. Can I do the audit of Jio Limited? My father is holding 60,000 face value shares of Jio Limited. Can I do the audit of Jio Limited? Yes, because it's secure up to the face value of rupees 1 lakh. My brother is holding 20,000 face value shares of the subsidiary of Jio Limited. Can I do the audit of Jio Limited? My brother is holding 20,000 rupees face value shares of the subsidiary of Jio Limited. Can I do the audit of Jio Limited? No, I cannot do the audit. The exception for the relative is only in the company, not in holding subsidiary associate or any other subsidiary of that holding company. Now this is again contradictory. What do you say? कि कंपनी में चलेगा पर कंपनी के होल्डिंग सब्सिडरी एसोसिएट में नहीं चलेगा. That is how it has been given. What does it say? Relative can hold security up to the face value of rupees 1 lakh in the company. Here it is not given holding subsidiary, associate or any other subsidiary of that holding company. Do you get that? Okay. Now, that is the new thing now. वो अगर डिपेंडेंट है तो ही आगे, और कंसल्टिंग है तो ही आगे बात बढ़ेगी, अदरवाइज तो इट विल नॉट कम ओनली. Okay, then after that, next one, just I continue with my first example. My father is holding 60,000 rupees face value shares of Jio Limited. Can I do the audit of Jio Limited? Can I do the audit of Jio Limited? Yes. What happened? And then I was appointed as an auditor because none of the disqualification attracted. And what happened after I was appointed as an auditor? Jio Limited came up with a bonus issue of 1:1. And that is why my father ka 60,000 face value ka shares became 1,20,000 ka shares. You might be knowing 141 subsection 4. If any of the disqualification is attracted after his appointment, there will be deemed to be a vacancy, and such vacancy shall be deemed to be a casual vacancy in the office of the auditor. So now my father was holding 60,000 shares. Jio Limited came up with a bonus issue, 1:1. That is why my father ka 60,000 shares became 1,20,000 shares. So now I am disqualified. Am I disqualified now? No. Relative can take. If relative exceeds the limit, then corrective action is to be taken within 60 days. I to cannot hold only. You'll say, I will hold the share and sell it within 60 days. No. The benefit of corrective action, the grace period has been given only to the relative only. You understand? No. Say, husband is working in a Big Four. You understand? Late sittings, every day coming 2, 3 o'clock, 4 o'clock in the morning. Okay, now wife was reading Companies Act, she came to know that this new provision has come over there. Every day she is giving ultimatum to husband. Tomorrow you have to come home on time. Tomorrow you have to come on time. He is not coming only. What she does, next day morning, stock market opens, purchases shares of 1,20,000 face value and says, now go to office. You understand, no? Wonderful equipment given, no? In the hands. You understand? Okay, now, see, 1 lakh, okay. So now, both are chartered accountants and she will know it. Okay, right. So now, then she says, now go to office. Okay, now you can go to office. Deemed to have vacated his office as an auditor. Okay, so then now what has happened? It says 60 days time given to Patofai wife. You understand? And you have to convince her to sell the shares. Otherwise, again, deemed to have vacated his office as an auditor. So the corrective action ka benefit is only for the relative. I, partner, to cannot hold only. Relative can hold up to the face value of rupees 1 lakh, and that too only in the company. And then what does it say? If they exceed the limit, then corrective action to be taken within 60 days. Is that okay for everyone? Right. Indebtedness is for all the 5 companies. Up to 5 lakh to the company, holding, subsidiary, associate, any other subsidiary of holding company. And here also guarantee is also for all the 5 companies. And security interest is also for all the 5 companies, but only the exception is only for the company in case of security or interest. Does everybody understand what I am telling you? The exception for the relative is only in the company. Then after that, 141(3)(d)(e). What is 141(3)(d)(e)? A person or his firm has any business relationship. A person or his firm has any business relationship now with 6 companies. You understand? For 141(3)(d), we had 5 companies. Now for 141(3)(e), we have 6 companies. ये parts तो है ही. Company, holding, subsidiary, associate, any other subsidiary of that holding company, any other subsidiary of that associate company. God knows what analysis they've done and developed all this, but then this is how it has been given. So for 141(3)(e), you have 6 companies. Are you getting that? Yes, subsidiary of associate, is it included for indebtedness and security? Subsidiary of associate not included, 141(3)(d), but for business relationship included. Are you getting? company, holding company, subsidiary company, associate company, any other subsidiary of that holding company, and one more added, any other subsidiary company of that associate company. So subsidiary of associate is also to be considered for 141(3)(e). Right, so what does it say? Person or a firm has any business relationship with these 6 companies. However, what are the exceptions? It says, one, you can enter into commercial transactions. Commercial transactions for rendering professional services. Commercial transactions for rendering the professional services as given under the Chartered Accountants Act. So under the Chartered Accountants Act, say tax audit work, certification work, any such which are allowed in the MCOS. It says for that if you get professional fees, for that if you have a business relationship, that is allowed. And second, then the objection people started, raising once the Draft Companies Act 2013 was issued. Okay, that means if I want to do the audit of Marriott, I cannot eat food in Marriott. Why? Business relationship ho jayega. If I want to do the audit of Kingfisher, I cannot fly by Kingfisher. Now anyways, Kingfisher is not there. If I want to fly by Indigo, I cannot do, if I want to do the audit of Indigo, I cannot fly by Indigo Airlines. Why? Because business relationship ho jayega. If I want to do the audit of Airtel, I should not have a prepaid or a postpaid connection or a TV connection of Airtel. Because business relationship ho jayega. If I want to do the audit of Apollo hospitals, I should not go over there for a medical checkup, otherwise business relationship ho jayega. That were the objections, which the Chartered Accountants started raising, and that is why came the second exception. What is the second exception? Professional services as a customer. Look at these people. It says only as a customer, not as a supplier, lessee, lessor or service provider. Only as a customer. That too in the ordinary course of business. That too in the ordinary course of business. And that too again at the arm's length price. So commercial transactions as a customer in the ordinary course of business. So whatever price other people pay, same price you also pay as a customer. Mainly for companies who are engaged in the activities of hotel, hospital, airline, telecommunication and other similar business. Do you understand that? The 2 exceptions to 141(3)(e)? Yes, one for rendering professional services and second as a customer in the ordinary course of business and that too at the arm's length price. Right. Then after that you have 141(3)(f). What does it say? Relative is a director or is in the employment as a director or a key managerial personnel of the company. You understand? So if my mother is the managing director of Jio Limited, can I do the audit of Jio Limited? My mother is the managing director of Jio Limited. Can I do the audit of Jio Limited? No. My sister is the managing director of the subsidiary of Jio Limited. Can I do the audit of Jio Limited? My sister is the managing director of the subsidiary. As per Companies Act, you tell me. My sister is the managing director of the subsidiary company of Jio Limited. Can I do the audit of Jio Limited? Yes, because यहाँ पे क्या बोला है? Relative is a director or is in the employment as a director or a key managerial personnel of the company. So it is not talking about all those 4, 5 or 6 holding subsidiary, associate or those. Right, so that is 141(3)(f). I think this we had seen it with clause 9 part 1 first schedule also. You remember Fair and Lovely, Ashwin and John? You understand? We had seen in clause 9 part 1 first schedule accepts appointment as an auditor of a company without first ascertaining from it whether the requirements of section 139 to 142 in respect of such appointment have been duly complied with. And a relative is a director or is in the employment as a director or a key managerial personnel of the company. Then 141(3)(g). What does it say? CA is in full-time employment elsewhere. So full-time employment elsewhere. So I am a partner in ABC and Associates, but I am also working full-time in another organization. Can the firm accept any company audits in my name? 0 company audits. And other than that, if you've exceeded the limit of 20 audits per person, exceeded the limit of 20 audits per person. But while counting this limit of 20 audits per person, what are the audits which are to be excluded? 1-person company, small company, dormant company, and a private company having paid up share capital of less than 100 crore, not less than or equal to. What does it say? Paid up share capital less than 100 crore. Again, they have made questions on this one in May 16 exams. Because May 16 exam, this was the amendment which had come. And okay, pehle they had no exclusions over there. It says all audits were to be counted while calculating the ceiling limit of 20 audits per person. But now what does it say? While calculating the ceiling limit of 20 audits per person, 1-person company, small company, dormant company, private companies having paid up share capital of less than 100 crore are not to be considered. Do you understand that? 1-person company, small company, dormant company, and private companies having paid up share capital of less than 100 crore. These are not to be counted. Right. Then after that, 141(3)(h). What does it say? A person has been convicted by a court for an offense involving fraud, and a period of 10 years has not elapsed from the date of such conviction. A person has been convicted by a court. What is the common heading before these 9 clauses that I am reading? A person shall not be eligible for appointment as an auditor if he is convicted by a court for an offense involving fraud and a period of 10 years has not elapsed from the date of such conviction. So once you've done a fraud and the final order has been passed by the court against you, it says next 10 years, no company audit for you. So whenever you do a fraud, you should do such a fraud that at least 10 years no work is required to be done. Okay, right? So what does it say? Person convicted by a court for an offense involving fraud and a period of 10 years has not elapsed from the date of such conviction. Right. And last one, 141(3)(I). What does it say? A person either by himself. Now look over here, very dangerous. A person either by himself nor through his subsidiary company or his associate company or any other form of entity. Please understand, this is not subsidiary associate of Jio Limited. This is subsidiary associate of Dynamic, the CA. You know who is going to do the audit. So if I want to do the audit of Jio Limited, I should not, my subsidiary, my associate or my any other form of entity should not provide directly or indirectly. ये भी नया लाया है, Companies Amendment Bill 2016. Directly or indirectly to 3 companies. My God. For 141(3)(I), there are 3 companies. You understand? Company, holding company, subsidiary company. Baat khatam. You understand? For 141(3)(I), how many companies are there? 3 companies. Company, holding company, and subsidiary company. What does it say? A person neither by himself nor through his subsidiary or his associate provide directly or indirectly consulting specialized services as mentioned under section 144 of the Companies Act 2013 to company, holding company and subsidiary company. Matlab, let me elaborate little bit more. What does it say? I cannot, yani ke person, my subsidiary, my associate or my any other form of entity, all we 4, we cannot provide the section 144 services to company, holding company and subsidiary company. We cannot provide. If we provide, then we are disqualified under 141(3)(I). So through my subsidiary, I am providing consulting services to the subsidiary of Jio Limited. Can I do the audit of Jio Limited? Through my subsidiary, I am doing consultancy work for the subsidiary of Jio Limited. Can I do the audit of Jio? No, I cannot do the audit. Through my subsidiary, I am providing consulting services to the associate of Jio Limited. Can I do the audit of Jio? Yes. Associate का है यार, तीन ही है ना, company, holding and subsidiary. Through my subsidiary, not company का subsidiary, CA का subsidiary or CA का associate or CA का any other form of entity. If I provide consulting specialized to the associate of Jio Limited or to the subsidiary of associate, can I do the audit of Jio? Yes, I can do the audit of Jio. But through my associate, if I provide consulting to the subsidiary of Jio, can I do the audit of Jio? Through my associate, I provide consulting services to the subsidiary of Jio. Can I do the audit of Jio? No, because company, holding company and subsidiary company. Right. So now first let me go to section 144. What is section 144? Auditor not to render certain services. Auditor not to render certain services. So that means a statutory auditor cannot provide any other services. You can't do tax audit, you can't do certification, no work you can do. No, he can provide other services as which are approved by the audit committee or the board of directors, as the case may be, because not necessary that every company will have an audit committee. So can I do the tax audit of Jio Limited and the statutory auditor of Jio Limited? Can I do the tax audit of Jio Limited? Can I do the tax audit? Yes, but it should be approved by audit committee or board of directors. But what does it say? In these other services, baki whatever services you want to provide, statutory auditor to the company, in these services should never be there. This is the blacklist. Okay, these services, if statutory auditor you provide, you are disqualified under 141(3)(I). Not allowed. Even after the approval of audit committee, board of directors also not allowed. Please pay attention. These services are never allowed to be provided by the statutory auditor. Other than these services, if he has to provide any services, they should be approved by audit committee or the board. But these services can never be provided. So there is no question of getting approval of BOD or audit committee for the same. What is that blacklist? It says one, the accounting work. What does it say? The internal audit, accounting and financial systems. Yes, accounting system work and the internal audit work. Yes, accounting work and the internal audit work. Then it says design and implementation of the financial information system and the outsourced financial services. Outsourced, outsourcing, service organization. Outsourced financial services can never be provided by the chartered accountant. Then what does it say? Investment advisory services and investment banking services can never be provided. Then what does it say? Actuarial services and the management services. यानी कि MCOS का पूरा list इधर आ गया है. And any other kind of services as may be prescribed. Other kind of services as may be prescribed. I'm just telling you, IPCC November 16, they asked this question. IPCC November 16 audit paper, they've put this question. So most probably for your exams next time or after that, we could see this question on 144. And what I understand is in CA final law also, so far this question has not come, no? And I think section 144 auditor not to render certain services, that question has not yet come in CA final law also. But asked in IPCC audit. So that's just my analysis which I'm sharing with you. So bigger probability that this 144 could be asked in your exams. What does it say? Accounting and bookkeeping. Accounting and bookkeeping, internal audit. design and implementation of financial information system, outsourced financial services, investment advisory, investment banking, actuarial services, management services, and any other kind of services as may be prescribed. These services can never be provided. Right, so this is the entire list of disqualifications under 141 subsection 3, and I have covered 144 also with it. And what if any of the disqualification is attracted after appointment? Then in your answers you require this 141(4), no? If any of the disqualification is attracted after appointment, there will be deemed to be, the auditor will have to vacate his office, and such vacancy shall be deemed to be a casual vacancy in the office of the auditor. And a casual vacancy in the office of the auditor. What disqualification attracted after appointment? Disqualification attracted after appointment. Then he should vacate his office, and such vacancy shall be deemed to be a casual vacancy in the office of the auditor. ये ऐसे standard sentences तो learn करने ही पड़ते हैं कि generally exam question में क्या होगा कि is disqualified. So now disqualified, तो what next? So as per section 141(4). Yes, the auditor shall have to vacate his office if any such disqualification is attracted after appointment, and such vacancy shall be deemed to be a casual vacancy in the office of the auditor. Right, that is 141(4), and this is entire 141. Right, start copying. Yes, any point, anything not understood, you ask me. No, as may be prescribed. So they've not yet prescribed anything over there. 144, now you are asking. It's not yet prescribed. Old company law, just 5 disqualifications were there, very simple ones. And what is the common sentence which you'll say before 141(3)? A person shall not be eligible for appointment as an auditor if, and then you have to write down. Ab jaise exam mein question indebtedness pe hai, so what section reference will you give? If the question is on indebtedness. आगे 141(3)(d) 2, no? Indebtedness is 2, no? अरे ऐसा लगने दो ना कि ऑडिट का क्लास किया है. Indebtedness का बहुत क्वेश्चन आता है, so that's why you remember 141(3)(d)(2), and it's not 143, it's 141. हाँ, 141(3)(d) and then 2. Indebtedness. See, unless and until somebody specifically tells you, it's not possible for you to remember. But once that I've specifically told you, then what's the harm in remembering? Right? Make 9 columns like me only. Like 3 columns, you know, A, B, C, D, E, F, G, H, I. Better that way, or you can make it your own way. Write it in your book, underline करके कुछ नहीं. Yes, any word not understood, anything, please ask. Don't write wrong things in your book. So I don't know how many more amendment bills are going to come. Okay, but at least the 2016, earlier there was 2015 amendment bill, now 2016. So better before that you clear, so that you don't have to do any further amendment bills. And see, if we don't know as of for May 17, November 17, are these applicable? And if, like I have taught you, if it becomes applicable, you know what it is. And even though if you come to know that it is not applicable, so don't get, overexcited about it. You know, okay, if it is not applicable, then that financial dependent ka thing is not relevant for me. That's the only thing, no. You can't immediately make a comment, अरे वो ये पढ़ाया पर अभी वो नहीं applicable है. That much you can, distinguish for yourself, okay, what is the new thing and what's the old one. Like it may so happen, that 701 may not be applicable for your May 17 exams. A 701, communicating key audit matters. So it's okay if it's not applicable. You understand? No? Because the standard has been issued. It is in the, applicable to the industry also from 1st April 2017. But maybe it's not applicable. But what could have I done had it been applicable? Your class would have been already completed, no? So even though if it may happen that few things are not applicable out of what we've already studied, so you just keep that much part aside and study. Done? $20 audits per person. So if I'm a partner in 3 firms, each firm I can accept 20 audits? Per firm? I'm a partner in 3 firms. So and then I'll become partner in 10 firms. So I'll get 200 audits. Aisa? No, it's all firm mila ke 20 audits. And how the firms distribute the audit amongst themselves, it says it's their affair. And it's the decision of the firms mutually, ke how many audits to be taken in which firm. But the limit is per person. The limit is not per firm. So across all the firms in which you are a partner, the limit is 20 audits per person. So even if you are a partner in 7 firms, your limit is 20 audits only. Otherwise, if you want to get more 20, you will become partner in 1 more firm and you will get more 20 audits. Five companies, 6 companies and 3 companies. CA full-time, CA is in full-time employment elsewhere, yani the person, yes, or exceeded the ceiling limit of 20. And while counting 20, which are the audits to be excluded? OPC, 1-person company, small company, dormant company, and private companies having paid up share capital of less than 100 crore. Person either by himself or through his SC, subsidiary company, AC, associate company or any other form of entity directly or indirectly to 3 companies, provides those section 144 services. Yes, getting? CA full-time employment elsewhere. He started from niche, you are starting from upar, aisa kya? Okay. Because he is asking I, you are asking G, so I thought his speed is faster. हो गया लिख के? I. F. Relative is a director or is in the employment as a director or a key managerial personnel of the company. Exceeded limit of 20 audits, or if he's exceeded the ceiling limit of 20 audits per person, excluding one person company, small company, dormant company, private companies having paid up share capital of less than 100 crore. Done everyone? Subsidiary company, a person neither by himself nor through his subsidiary company, associate company or any other form of entity. So SC is subsidiary company, AC is associate company and any other form. B is you yourself are the director and F mein your relative is a director. Big difference. So you, if your relative is an employee, then are you qualified? If your relative is an employee in the company, are you qualified to be appointed as an auditor? My uncle is working as an employee in Jio Limited. Can I do the audit of Jio Limited? Yes, relative is a director or is in the employment as a director or a key managerial personnel. So if my uncle is just an employee working over there, say as an engineer, then am I qualified to do the audit of Jio? Yes, because relative ke liye only director or employment as director or KMP. So if relative is an employee, can I do the audit? Yes, I am an employee. Can I do the audit? No. That 141(3)(b, no? हो गया लिख के everybody? Right. Now first write section 144. अच्छा, I thought हो गया. After 1 I के बाद आपको 144 लिखना है. Any other form? SC क्या है? Subsidiary company. AC associate. Any other form directly or indirectly to 3 companies provides 144 services. You understand? No? ठीक है. लिखो अभी. Section 144. Auditor not to render certain services. He can provide other services as are approved by the audit committee or board of directors as the case may be. But these services can never be provided. Accounting and bookkeeping, internal audit. Design and implementation of financial information system, outsourced financial services. Investment advisory services, investment banking services, actuarial services, management services, and any other kind of services as may be prescribed. Yes, RATTA. Yes. What are you going to write over there? RATTA. He knows now. That's added to his vocabulary. Audit class में हिंदी free. Right? So now the entire list of MCOS now cannot be provided by the statutory auditor of the company. पहले ICAI का notification what we the 1 to 2 was MCOS fees cannot exceed stat audit fees for clients whose turnover is more than 50 crore. अब तो क्या बोलता है you cannot do only MCOS work, management services. Yes, just to ensure the independence of the auditor. It says give it to other chartered accountants. Don't give it to the same firm. Let everybody's stomach, right, fill up. And mainly, other than, yes, just to ensure the independence of the auditor. Done, everyone? Yes? And then, now you're not done, now you have to write relative. And then you have to write those 5 companies. Yes? Relative includes members of HUF, and other than that includes spouse. Father, mother, brother, sister, son, daughter. Right? And then you have to remember that new thing also now. What is that new thing? Financially dependent or consults the other for their investment decisions. Financially dependent or consults the other for their investment decisions. And क्या बराबर बताया ना, parent, sibling and child. What do they say? Parent, sibling and child of you or your spouse. Financially dependent on such a person or consults the other for such investment decisions. So this financially dependent is an R raised to 10. She's not come today. अच्छा. Or consult such person for decisions. Done, everyone? And then you have to write 141.3D, 141.3E and 141.3I. 5 companies, 6 companies and 3 companies. है ना? Right? Next you have to make this table. 141.3D, 141.3E and 141.3I. 141.3D, how many companies? 5 companies. 3E, 6 companies. And I, 3 companies. So can I provide consulting specialized services to the associate of Jio Limited? Can I provide consulting specialized services to the associate of Jio Limited? Through my associate, can I provide consulting specialized to the associate of Jio? Through my associate, can I provide consulting specialized services to the associate of Jio Limited? Can I provide through my associate consulting specialized services to the associate of Jio Limited? Yes, because I cannot provide only to company, holding and subsidiary. Neither by myself, nor through my subsidiary, nor through my associate, nor through my any other form of entity. I cannot provide these 3 services to those 3. Or to those 8 services to these 3. Company, holding and subsidiary. Right, written everyone? And then what does 141.4 say? What does 141.4 say? If any of the disqualification is attracted after appointment, he shall vacate his office as such auditor, and such vacancy shall be deemed to be a casual vacancy in the office of the auditor. Like, nowadays when we go to the mall, when we are at the entry or the exit, when we reach over there, automatically the glass doors open, no? Automatically the door opens, the door closes. So that is like automatic removal of the company auditor. He says, nobody came and told me. He says, nobody is going to tell you. 141.4 has written it in law only. You understand? Any of the disqualification attracted after appointment deemed to have vacated his office as an auditor. Right? Let's come to the question bank. Let's come to question number 1. Right. Yes, what is the page number? 4.22. Page number 4.22, question number 4.18. R&M is an audit firm having partners R, M and G. S is the relative of R holding shares of STP having face value of 1,51,000. Whether R and M are qualified to be appointed as an auditor of STP company. What does it say? RS relative of R is holding shares of STP having a face value of 1,51,000. Yani ki relative holding securities in the company of a face value exceeding 1 lakh. Right? Relative can hold up to the face value of rupees 1 lakh. So as per section 141 3D1 of the Companies Act 2013, the common sentence before the 9 clauses, a person shall not be eligible for appointment as an auditor of a company. Yes, you have to remember this sentence. Right? Who or his relative or his partner is holding any security of or interest in the 5 companies. Which are the 5 companies? Company, subsidiary, holding, associate or subsidiary of such holding company. Further, as per the proviso to the section, the relative of the auditor may hold the security or interest in the company of a face value not exceeding 1 lakh in the instant case. Right? Therefore, R&M audit firm along with its partners will be disqualified for appointment as an auditor as the relative is holding securities which is exceeding the limit mentioned in the proviso to 141 3D1. Therefore, R&M will be disqualified to be appointed. So, they have not yet been appointed, so there is no question of vacation of office. 16? No. That is if they are within the limit and then they exceed the limit. Here they have already exceeded. So, here you don't get the grace period of coming in the limit within 60 days. Only by law if you exceed the limit, then it says you can come within the limit. Or all of a sudden if a relative purchases. Right. So, before, abhi to they are not yet appointed na. If after appointment it exceeds, then you can take the 60 days ka benefit. Right. Next question. Read 2. Yes, give your opinion. Whether the following persons can be appointed as an auditor of a limited company or not. A firm of CAs in practice, a partner of which is a secretary of the company. So secretary matlab he is an employee. So 141(3)(b). You understand? Person or partner, he is an officer or employee of the company. A member of the institute who is of unsound mind but holding a COP. He is disqualified? He is qualified. Because what does it say? Unsound mind and stands so adjudged by a competent court. तो ऐसे तो हम लोग normally भी तुम लोग एक दूसरे को बोलते हो ना यार क्या? You understand, no? So it says any one of you saying to each other doesn't make a difference. It says the court should say. Adjudged so by a competent court. So till the time the court does not say so, he is qualified to be doing the audit. So long as he is not been adjudged a man of unsound mind, he may be so appointed. Right? So 141(3)(b) and then second that unsound mind. You understand now? RTP May 15. You understand the process, you know, the 17th edition, 18th and 19th is the new one now, but the 17th edition of this book, you know, when the 18th came after that, there were 150 pages added in the books in the 18th edition, and now 19th more 10-20 pages added further. So why these 130, 150 pages got added into the books? Because, after the class used to get over, when I used to tell them how do you, do the entire study for the subject, I used to tell them, you should, in addition to this book being done 3 times, you should go through suggested RTP and practice manual. Suggested RTP at least of last 5 years, yani ke 10 attempts is what I'm talking about. Okay, but then what I realized, it's always falling on deaf ears. Okay, whatever is ready-made in the books, they do that much, and RTP is suggested in spite of how much ever I'm telling them, they are not doing it. So then what I decided, what was my intention for not putting it in the book? The book looks a bit bulky, heavy. But then I said I have no option. You understand? That is why what I did, all the RTPs, I compiled. So, compilation of RTPs, like, I was completely engrossed in the Word, Microsoft Word. Because see, all RTP mein all questions are there and then all answers are there. So first I put a respective question ke baad respective answer. Then they were all from the different chapters. So first then next thing I put them, in the different chapters. Then after that in the chapter also, say like company audit, they were of different sections. Then I arranged them section wise. Then after that there were a few questions which were repeated. You understand, no? Like if you see questions, now this is there in RTP November 16 also and RTP November 14 also. So there was a lot of repetition which was coming over there. Then that was deleted. You understand? So with all that effort, so my effort is of use if you study from the book effectively. Otherwise again, ye mehnat karke bhi, if there is no use, if the students don't utilize, then doesn't serve any purpose. But now it's easy, when I worked from the 17 to edition, it took me like months, to update the book. But now my work is very simple. I just have to update the RTP November 16 and the suggested, of November 16, the question paper which comes in. Okay, so that is why, all the old, I told you, Purane questions and RTP, May 10 and all those have been put over here. Right. Yes, read question number 3. Navy and KV Associates, a CA firm, has been appointed as a statutory auditor of Poor for the financial 13-14. Sevi, the relative of Navy, a partner in Navy and KV, is indebted for 6 lakh to Wealthy, a subsidiary company of Poor Limited. Comment. Yes, disqualified because indebtedness again for all the 5 companies. Right. Next one, Pratik. A practicing CA has been appointed as an auditor of Opus. He is holding securities of the face value of 89,000. You are required to state whether Pratik is qualified to be appointed as an auditor? No. Yes, disqualified. And would your answer be different if instead of Pratik, Kuresh, the stepfather of Pratik, is holding the securities? Then qualified, because relative can hold up to the face value of rupees 1 lakh. Next one, 5. Ram and Hanuman Associates, Chartered Accountants in Practice, have been appointed as statutory auditor of Krishna Limited for 13-14. Hanuman, a partner of Ram and Hanuman Associates, holds 100 equity shares of Shiva Limited, a subsidiary company of Krishna Limited. If I public interest, company law only applies, no public interest. My partner, my relative, we cannot hold share in company, holding, subsidiary, associate, any other subsidiary of holding, except for relative can hold up to the face value of rupees 1 lakh in the company. So here, what does it say? Hanuman, a partner of the firm, is holding 100 equity shares of a subsidiary company. So that is clearly attracted by the disqualification. So no public conscience required over here. Okay, so what does it say? As per a person shall not be eligible for appointment as an auditor if holds any security of or interest in, provided that relative may hold up to 1 lakh. Then as per 141(4), where a person appointed as an auditor incurs any of the disqualification mentioned after his appointment, he shall vacate his office as such auditor, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. In the present case, and therefore Ram and Hanuman would be disqualified for appointment as an auditor. Next one, question number 6. Amar, a CA, bought a car financed at 7 lakh by Chaudhary Finance Limited, which is the holding company of Charan Limited and Das Limited. He has been the statutory auditor of Das Limited and continues to be after taking the loan. So indebtedness exceeding rupees 5 lakh. So what does it say? He should vacate his office immediately and Das should immediately appoint another auditor. Next one, question number 7. SSS & Company is an audit firm having partners Satyam, Shivam, Sundaram, who right now are doing the audits of 4, 6 and 10 companies respectively. So what are the maximum number of audits remaining? So 4 plus 6, 10, 10 plus 10, 20, 60 minus 20, 40 audits remaining. In the name of individual partners, so 20 minus 4, 16, 20 minus 6, 14 and 20 minus 10, 10. Can SSS & Company accept the appointment as an auditor in 60 private companies having paid up share capital less than 100 crore? 2 small companies and 1 dormant company? Yes, not to be counted. So all of these can be accepted. And would your answer be different if out of these 60, 45 are having paid up capital of 110 crore each? Yes, then out of those 45, they could accept only any 40. Yes? Right. Right. Then after that, next one, question number 8, 4 marks, May 2016. KSY & Company Chartered Accountants is an audit firm having 2 partners, K and Y, is already holding the appointment of 36 public companies. KSY & Company have been offered the appointment as auditor of 7 more private limited companies. Of the 7, 1 is a company with paid up share capital of 150 crore. 5 are small companies as per the act and 1 is a dormant company. So he can accept all of them because only 1 is having 150 crore paid up share capital. Would your answer be different if out of these 7 private companies, 3 are having paid up share capital of 90 crore? Still your answer would be the same because the limit is 100 crore. Right, so that was for May 16 it was asked. Question number 9. Adroit was indebted to Anfraxius for a sum of 6 lakh as on 1st April. However, Adroit came to know that he might be appointed as an auditor of the company. He squared up the amount on 10th of July. Later on, he was appointed as an auditor for 2016 at the AGM on 2015. Consequently, one of the shareholder complains that the appointment of CA Adroit as an auditor is invalid because he incurred disqualification under section 141. No, the disqualification should not be attracted as on the date of appointment. Now here the moment he came to know that he may be appointed, that whatever indebtedness was there, he squared up. That is why the query raised, the complaint of the shareholder is invalid. The auditor's appointment is not invalid, the shareholder's complaint is invalid. Right, so indebtedness to the company. In the given case, he's also repaid the loan amount fully to the company before the date of his appointment. Hence, the appointment of C. Adroit as an auditor is valid and the shareholder's complaint is not acceptable. Question number 10. Renault and Company Chartered Accountants appointed as a statutory auditor of R Limited for 13-14. The company is also in need of some actuarial services. Consequently, the board of directors offered the same to Sona, an associate of Renault, which has been duly accepted by the firm. And an associate also cannot provide consulting specialized services to those 3 companies. That is why he shall have to vacate his office as an auditor. Right? And the last one for 141 and 144. Contravene Limited appointed CA Innocent as an auditor for the company for the current financial year. Further, the company offered him the services of actuarial investment advisory and investment banking, which has also been approved by the board of directors. No, those cannot be provided by the statutory auditors of the company. Yes, is that okay for everyone? Right, so that is 141 and 144. What is 141? Qualifications and disqualifications of the company auditor. What is 144? Auditor not to render certain services. So the next section which we have after this is section 139, which is regarding the appointment of the company auditor, which we will study after the break.